opening range breaks, double tops, double bottoms, bull flags, liquidity sweeps. What strategy do you use? Well, on some days, they all work just fine. And I'm going to show you how yesterday they actually all worked, and I'll show you how you can tell that they were going to set up and take off. So yesterday when I made the video around 6 o'clock, the same time, I actually said I was looking for shorts in the day unless we were able to get up over the high of day and hold that structure, then we could move upwards. Otherwise, I figured on shorts being the portion of the day. We were holding above VWAP. We never even broke VWAP yesterday. And so as soon as we opened, all right, my early morning analysis had to flip over to the bullish side. Now let's look at how every strategy could have worked for you yesterday. We're simply going to use the 5-minute. And you'll see between candle action, setup, levels, and volume that no matter which one you chose yesterday, it would have worked out for you. Starting off with simply the 15-minute opening range breakout. We'll back this box up right here. You can see right here is our 15 minutes. Now when we opened up, where this yellow line is here, right around 384.50, we shot up. Good strength, right? Bears tried to push down, bears tried to push down. Couldn't really make anything lower right there. We're sitting around the overnight high, but we already took it out. So you can almost ignore the overnight high for now. We have the value area high from Friday, that showing resistance. So we have a level of interest. We have our 15-minute. So we have a confluence resistance, 15-minute opening range break and value area high. We're feeling a little bullish. We're above the VWAP. Enough indication to say with volume, big volume up, small volume down. If this can take out the highs at 475, there's no reason we can't move up to high a day from the day before. Now, I did take this trade, and I will tell you, it did hesitate. Again, as a bit of a momentum trader, it was hesitating right here. And if I didn't have my volume bars on, I may have even jumped out of this trade. I had set my target to just 509. I didn't even go to high a day. I was just under the opening range break Lux Algo first level. In fact, I actually wanted to go to the first level, which I think was about 512, but I wasn't able to slide up my sell order on the chart for whatever reason. So I was kind of stuck at 509. But I know I jumped in probably right around 474, 475. And I got an immediate, once it kind of broke through, once that volume started kicking in, it started really pushing, and then it popped right up to 509, blew right through me, and then definitely just held up here for the next few minutes before it did reach high of day. So number one, right, you hold the open, you break out of the 15-minute ORB to the upside, you take the break, you ride to the next level. Next level for me was Lux Algo level 1, level 2, high a day. Okay. Great. Trade number one out. So what we're going to look for now, let's say you missed the breakout. You're conservative. You want to retest. No problem. We're just going to slide this 15-minute ORB box over. Now we come up here. This yellow line that you see here is the Monday night overnight high right here. And looking at that, probably a data high, some type of squeeze. You probably have longs that are stuck here, right? Looking to get out, because they were just in trouble all day, all in the overnight. And here we are approaching. So we come up to that level. We just test it. We don't break it. That's fine. We don't want that trade yet anyways. What we want is a retest of the top of the 15-minute opening range break. We come down. We don't grab it. We start to bull flag right back up. Now, I don't take this trade, but what I do see is that in this general area, if I were to draw a second box here and not confuse everybody, this here becomes a bit of liquidity, right? We have just a little liquidity zone here. As we broke out here, we just sort of have these single prints, I'm most likely right there. We leave that open. So I know that we're likely going to retest this area again at some point in the near future. As we come up, we want to see now, we've already broken through high of day. We can ignore that. So we're going to look at how it sweeps that overnight high. Does it push through? And does this become our new resistance? Or do we get a look and fail, a liquidity sweep, and a drop back down? Now look at the volume here, right? We're pushing up, pushing up, pushing up. We're getting close. The volume is dying. A little bit of selling pressure, and then the selling pressure gets really strong, stronger than any of the buy-in pressure. You could have, I thought about it, I hesitated, so I missed it. You could have taken this trade here right around 52 to 54 underneath. Small risk, going right up back to either wick high or the top. And you would have been looking to ride this down to close this gap here, close this box out. I mean, that's, you know, what are you talking about? Let's say you don't even jump in there. Let's say you jump into the bottom at 538 and only risk yourself 30 points. You're still going down to 472. That's incredible. That's still a 70-point run. And it's almost not guaranteed, but that was a very, very promising trade that I really wish I could have gotten in super late and done really well in it. But I hesitated. And once I hesitate, I just stay out of the trade. I've too many times jumped in too late and it's burnt me. So now we have opening range break. We have a look and fail, liquidity sweep to close the gap. Now what we're looking to do, we can move that. We've closed the gap. We're looking to see if we get a retest off the opening range break. We do not. It fails, goes all the way through. We ignore the level now. We don't want to jump in. Now what we can do is we can say, hey, with strength, this thing came right back into range. What you can do is for a 20-pointer, you can ride this back to the lower end of the range. Usually when you jump back into the range with a lot of strength and there's no hesitance, you can take this all the way down. Again, a trade I did not take, but once again, in range, you take it to the bottom. That wouldn't have been a problem. Now, you don't want to hold beyond the bottom just yet because you have bottom of the range. You have a strong opening. So you have opening print, bottom of the range. You want to see how this reacts. If you rode this down, I would have sold it probably right before the open. But what I was looking for was the reaction here, right? To me, that seemed like a more confident trade in my mind than taking the range trade. Range trades don't always have to play out, but there's a good likelihood with strength that they will. This just was an easier setup for me. So I waited for it to touch the bottom of the range in the print. What did it do? Touch the bottom of the range, touch the print, liquidity sweep, and a nice strong reversal back up, completely reversing the volume back to the green. I went in as soon as this candle went back into the green. So I let it bar down into the red. As soon as it was eaten up, I can see bulls buying this all the way up. It went green, boom, I was in. And at this point now, I wasn't being greedy. I think at this point I was on my third trade. I just wanted to get maybe another 20 points. So I only rode this to the next obstacle, which I think was 20 points up. I rode this right up to around the overnight high, which in all honesty was not valid anymore as we had already run through it multiple times. I probably should have taken it to value area high or back to top of range. Then that would have been an incredible trade. But I'd let it sell early and I was fine. So as you can see, now we have the liquidity sweep. We break above. When you get a candle like this, right, you break above, outside of the range, above the previous value area high. It comes down, but bulls still hold it. Most likely, you will test it again, especially when it can't get to the lower end of the body. So if you let it open, nope, doesn't want to go to the end of the body. As soon as it starts ripping back up, you go in here at 478, you cover that wick, 515. Another great trade, or you ride it to high of day if you have runners or if you're feeling strong about it. Let's say you don't take that trade. Let's say once again you're looking for a retest. Okay, well, this was a retest, but what I will say is that on this, even though you had a bullish candle here, just slightly, right? Your volume was down here. Sellers still had more pressure. This was a very weak green candle. Probably wouldn't have gone in on that one. So now I would say you're bull flagging for a better setup. All right, we're dipping down. It's kind of chopping up a little bit. Maybe you're unsure about this breakout. Maybe you feel like because I put in a lower high, you don't want to take that one, but you do see that there is a higher low here. So you want to wait for a new confirmation. Well, guess what? You get it, right? High a day breaks, a tiny little flag. Look at the volume here, just completely dead. In fact, it's green on this pullback. It's barely red on this pullback, and then immediately shoots up. Now, it probably didn't look like that right away, but essentially you take the break of that candle at 556. Your initial target, you want to be just above this liquidity sweep high here, 556. You're looking at 592. If you're willing to hold and strength goes, you're going to 600. If you're still holding, well, that thing just took off. Now, of course, I'm gone long by now, And what did I say yesterday? It's always been afternoon lately where the big trades are happening, and look at that. Now, if you want a little bit of confirmation to add to all of this, 14 and your 50 EMA, right? I said bearish, but then you look just in the 5 minute and you are bullish all day long. If we want to verify on a higher level, let's do that real quick. So in the morning, right? Reasonably enough, you're going to say, well, let's be bearish. We're downtrending. We're under the 50 EMA. We break through these overnight lows here. We'll probably be bearish for the day. What happens? Well, at 9 o'clock, this thing rockets up. The sellers do push it back down. But look, by 11 o'clock, you are still bullish. You're above the 50 EMA. You're getting that crossover. You're above the VWAP. And you get that cross right before that big breakout. If you're an afternoon trader, man, you were printing money yesterday. So there you go. Every possibility can work. Well, what's the difference? Well, the difference is use your strategy, right? Wait for that level, know your trend, and then look for reaction, right? What's the candle doing in correlation to what the volume is doing? Find your reasonable amount of stop, whether that's $100 or $500, $50 or $1,000, right? Whatever size you're trading on. Try not to risk. When people say 1% of an account, I always find that really difficult. I would say if you're trading in the evals, try to keep it to, 10 to 20%. If you have a decent strategy, realistically, in one day, you shouldn't lose 5 to 6 times at full stop loss. If you do, you need to probably adjust your strategy some. If you have 2 straight losses, probably just stop for the day. Next day, if you're getting low in the account, downsize, grind your way back up, and then go back to full size again, right? Never full port. Look for, even if you're on the 150K account on the evals, hey, 300 to 500 a day is solid. It's nice to make 1,000 to 2,000, but again, think about what you actually make per day in real life on your W-2, right? And then think about what you can make in an eval, especially if you're copy trading. Copy trading, 2 accounts, 5 accounts, 20 accounts, such as Apex, or commonly 5 with almost all of the firms. You know what 300 to 500 is times 5 or times 20? Yeah, that's probably a lot more money than you make in your regular day job. So every strategy, it all works. It all can work. They do fail. Just make sure you test your levels. Make sure you're looking at volume, looking at price action, secure conservative stops, and let your winners win. That's it. Going in today really quick, let's see what we have. Well, obviously, we're bullish going into the open, but that is a massive move. We are net long. We are well over currently yesterday's high. I won't even set up the rest of the chart. I'm trying to make this video short. Looks like we have a nice big gap here. We could get a retest today. Could this be a bull trap? We don't know. But right now, until otherwise, at 6:20 in the morning, we are currently back to being bullish. We've recaptured these old supports here. We are now heading up into the meat of the bottom of 24,224. Could we be retesting 535? Don't know. Could we fall all the way back down and get back into the 23.5s? Very possible, right? Let's just let the day open, be patient, look for your trade, don't hesitate, go for it. Good luck to you. I'll see you tomorrow.